When you're looking at whether something's deductible, there are 4 qualifications. And I'm going to walk through these qualifications with you. The first one is there must be a business purpose. And a business purpose, pretty easy test to meet. There just has to be a business reason for it. So that's number 1. Number 2, it must be ordinary. Now, ordinary means it's typical for your business. And it's typical both in the amount and frequency. So it'd be typical, for example, if you were an insurance agent, it might be typical for you to take them to Las Vegas, do an evening with them in Las Vegas. Would not be typical for your CPA to do that. I mean, CPAs are the cheapest people in America, so it's got to be ordinary. The third thing is it has to be necessary. Now, in our previous video, we talked about what necessary means. I know we didn't use that term, but we did talk about it because this means it's profitable. If it's going to be profitable for us, it's probably necessary. Now, it still has to be ordinary. It still has to have a business purpose, but it needs to be profitable. The fourth one is the one I want to spend the most time on. The fourth one is it must be documented. I recently handled an audit for a client. The auditor was pretty intense. They wanted all of the bank statements. Now, this is a wealthy client, so there were a lot of bank statements, all of the investment statements. We had to prove that every dollar that came in was not taxable, because a lot of times, if you think about wealthy people, they're transferring money between accounts. Well, the IRS looks at money coming in as money coming in. It must be taxable, and you actually have to prove it's not taxable. So you'd better have documentation that it's not taxable. And some of that documentation is saying, hey, look, here's the bank statement from the other bank, and it shows the money going out, and it's exactly the same amount of money, and it shows that it's coming into this. That's documentation. So it's not just receipts we're talking about. A lot of people focus only on receipts when it comes to documentation. But remember, all income's taxable unless the government says it isn't. And no expenses are deductible unless the government says they are. So we do have to document all of our expenses to make them deductible. If we have a pretend documentation, we get a pretend deduction, right? We have to have real documentation. If you get audited, the very first thing the IRS auditor is going to do is ask for documentation. They don't care whether it's a business purpose, ordinary, and necessary until they see the documentation. Once they see the documentation, then they care. Then they're going to go back on those other things. But honestly, I find that business purpose, ordinary, and necessary is a way easier task to argue than the documentation if I don't have the documentation. So this client that recently went through this audit, it took us several months to pull all the documentation. Now, I would suggest a simple way to do it. I would suggest you actually keep manila folders in your file drawer and you put all your documentation in the manila folders. It's not that hard. Or you scan all of the documentation into an app on your phone. Either one works, right? Some of you are old school and you're just going to stick it in those manila folders, and others of you get how to use that scanner app on your phone and you scan it and you keep it that way. The IRS actually prefers the scanned, just so you know. But what happens is that because you've got the documentation, the very first thing that happens is they're less skeptical of you. So let's say they ask for documentation of 25 expenses. They'll typically pull a sample and they say, well, give me documentation on these 25 expenses. You and your accountant get together, and in the next week or two, you pull together documentation, good documentation, receipts, what was the expenditure for, who were you having lunch with, etc. And you pull that documentation together and you deliver it to the IRS auditor. What if you could lower your tax bill and stack Bitcoin at the same time? Well, by mining Bitcoin with Blockware, you can. New tax guidelines from the Big Beautiful Bill allow American miners to write off 100% of the cost of their mining hardware in a single year. That's right, 100% write-off. Now, if you have $100,000 in W-2 or business income, you could purchase $100,000 of miners and potentially offset it entirely. And you have to dot your I's and cross your T's. So make sure when you are doing this that you plan with your CPA tax strategist. Blockware's mining as a service enables you to start mining Bitcoin right now without lifting a finger. Blockware handles everything from securing the miners to sourcing low-cost power to configuring the mining pool. They do it all. You get to stack Bitcoin at a discount every single day while also saving big come tax season. We always want to make money first, and then we want to make sure we're saving taxes on that money that we make. None of this is tax advice. So go speak to the team at Blockware to learn more by going to mining.blockwaresolutions.com/Tom and meet with your tax advisor. Well, the IRS auditor goes, wow. I mean, they've got all the documentation. I'll give you a perfect example of this. My wife is also a CPA. She had an audit, and this auditor was going to catch her. He wanted to catch this client. He wanted to catch my wife. He was determined to catch them. So he kept asking for more documentation. My wife go back to the client. This client was meticulous with documentation. Client would just send it over. My wife would put it in the audit book and eventually send the audit book, once all the questions were answered, send the audit book to the auditor. Well, the auditor was upset. There he goes, well, I need more documentation. By the end, they'd filled 4 loose leaf binders, 2-inch binders with documentation for this auditor. The auditor still wasn't satisfied. So what did we do? Well, my wife, the CPA, and her client said, we're going to go to your supervisor. Went to the supervisor. Supervisor says, you need to provide the documentation. My wife goes, here are the 4 books of documentation that we provided. And the supervisor looked at the auditor and said, we're done here. No change at all. Now, here's the cool thing about an audit like this. There was such good documentation, they never asked the question, did it have a business purpose? Was it ordinary? Was it necessary? Because they were kept going after the documentation. My wife and her client kept giving it to them. When you have that documentation, it's just like a little piece of magic, because what's going on in the auditor's mind is, hey, this person really is paying attention. They say that they have the documentation. They have the documentation, and it's exactly the documentation we want. Well, all of a sudden, they're going, what are we going to find here? Right? They have documentation. And I don't know what it is, but it's like the fact that they have it is more important than what the documentation is, having that documentation. So let's go through some examples of documentation. Well, the obvious one is receipts, right? When you're talking about meals, travel, that's receipts, expenses, office supplies, it's receipts. But what about the rest of the documentation? I mean, for example, the travel. We need to document that the travel had a primary business purpose. So let's say I go to Utah. Okay. Now I go to Utah. I'm going to go visit my house under construction up in Park City. I'm going to do that. Does that make it the primary purpose is to visit the house? Not necessarily. If I schedule meetings with business associates that I could only do if I'm there in Utah, and I have those business meetings and I document I've had those business meetings, that can make that the primary purpose. The fact that I go stop by the house, okay, so I stopped by the house. That doesn't mean it's not business. For example, I literally just did this yesterday. Was that going to Utah, was that profitable? Did I have a business purpose? Yes. Was it typical that I would actually go to see these people? Yeah, it was. Was it necessary? Was it profitable? Hugely profitable. Then I documented it. Okay, now all of a sudden I'm taking travel that most people would say, hey, I'm going to go see the house. And I might stop by and, say hi to one of my business associates. What's your primary purpose? Probably seeing the house. In my case, the primary business purpose was absolutely meeting with the business associates. And then I just happened to see the house. So it's not an all or nothing, right? Just remember, it's not an all or nothing. What about some other documentation? Well, real estate professional, you have to log your hours. And you may have to log not just your real estate hours. If you have another job, you've got to log your job hours, because your real estate has to be more than your job hours. Well, what about mileage? Are you going to log your mileage? Yes, you're going to actually track and document your mileage. Now, that doesn't mean every day you have to put exactly the number of miles, but you do have to have a calendar. You need to write it down. You need to have beginning mileage at the beginning of the year, ending mileage at the end of the year, and you have to have a reasonable documentation to show the auditor, hey, look, I'm 80% business. So no, you don't even have to be perfect. I'm going to tell you a secret right now. The secret is that most people have such poor documentation that when you produce good documentation, the IRS is a bit awed by it. They're like, whoa, they've got good documentation. And all of a sudden, they're your best friend. I've had this happen over and over and over again on audits. Now, here's what happens. Most people actually lose audits before they even open the letter. Not because they were wrong, just because they couldn't prove they were right. They did not have the documentation to show the IRS that their expenses were deductible or their income was non-taxable. And that's where entities changed the game.